Welcome back here to TMSignals. My name is Jeff Yady. I'll be walking you through applying options to the TrendRider and these signals. It's one of the most common questions that we get here at TMSignals is how do you apply options to the signals? And it's not a straightforward answer. And, you know, we did a webinar talking about it a little bit. It's a very complex answer because there are infinite number of ways to apply options to a stock. Well, are you going to do a spread? You're going to do a call, a put. You're going to do, long, short. You're going to buy, sell. You're going to do a calendar, a condor, butterfly. What time period are you looking at? You're looking at something that expires tomorrow, something that expires in 3 months. There's just an infinite number of combinations. And so it's not a real simple answer. But a couple things that I want to make sure that we understand, and I'll show you a little way that maybe you haven't thought about in terms of applying options to the TrendRider. So let's take AGO. All right, here's AGO. This was a TrendRider signal, and the buy here. Let's go to the history, and we'll see a little more detail. But the buy here was on May 5th. Okay, that was the trigger. Triggered at 39.20. Okay, and it ultimately stopped out. And closed out here at 39.48. Okay, it was adjusted a few times, and so it closed on June 2nd, but it had a gain and then pulled back and never hit its price target, and so it hit its expiration time period here and closed out on June 2nd. Yeah, it made 0.71%, but I promise you that any call option that you would have bought on AGO lost money, even though the stock made money. Any call option that was purchased lost money here on AGO, even though the stock went up. Why is that the case? Why would that happen? Well, you deal with two things. Number one is a spread. Number two is time decay. Right? Options are like handling an ice cube. The longer you hold it, the less you have. It melts. And so if you don't get a substantial move in your stock, you're going to deal with that melting, that decay element that comes into play. When you have a stock, it doesn't really matter, right? You can replicate these gains, loss numbers very, very easily. With an option, it's not that simple. There are gains in here that, can be depending on which option you chose, right? Let's come down here to AGO. And here, the stock triggered on October 5th, and it ultimately closed out October 19th was its first adjustment, and then closed out here in November. So this is one where the stock itself, went up 8%, 9%. Most call options went up, but if you had a short-term call option, a monthly call option, then you had an infinitely greater gain than if you had a 3-month option or a 6-month option or a leap. Okay, so the amount of gain, it can be very, very different there when applying the options. When it comes to applying options, there are just two words that come to mind: risk versus reward. And whenever I'm buying an option, I'm just going to talk about long calls and long puts. We'll save spreads and all that for another day. But when we're talking about options and buying directionally, which is what we're doing with the TrendRider, we're looking for a trend. We're buying directionally. What's my risk and what's my reward? Well, if we take a look at stocks in the TrendRider, okay, let's come to First Solar, for instance, and we look at the history. Is the history here for the stock to go flat after a TrendRider or for it to move pretty good? Well, it's for it to move pretty good. Even the losers move 10%, winners 20%, right? Well, we're talking about massive movement here in the stock. We're not talking about something that just, futzes around and goes up 1% or 2% a day and, all of that jazz. We're talking about stocks that really move and can really move against us. So if I'm going to go out and I'm going to buy an at-the-money option and say, well, you know what, I got a trigger here on the TrendRider for First Solar. Let me go buy a call option. And I buy at the money. What's going to happen? I'm going to pay up for it, right? You know, I'm at the money or in the money. I'm going to be paying a higher price, right? Am I going to have as much decay on a percentage basis? No, but I'm naturally going to be putting more risk on the trade. What else do I have? Well, I have less reward potential. If the stock goes up 30%, you know, I don't have as many contracts, and so I'm not making as much money on that gain from 10% to 15% to 20% to 30%. I'm not making as much as I would if I were in and out of the money option. So when it comes to applying the TrendRider, I can lower my risk and actually up my reward potential. But what do I have to sacrifice? Well, I have to sacrifice my accuracy. Meaning, I'm not going to make money. If I go this way and I lower my risk and raise my reward, I'm not going to make money on a call option when the stock only goes 2% my way. I'm not going to make money on the option if it goes against me. I'm only going to make money when it goes in my way, in my favor. So I'm only going to be right 20, 25% of the time. 30% depending on the stock. Meaning I'm only going to get that massive move that often. But ultimately, I'm going to make money. Why? Well, let's go take a look. Recently in the 100K challenge, I traded Triple D. I traded this stock. It triggered on the TrendRider right back here. And obviously, we know what the stock did, and great. You know, anybody can make money with the call options, right? No, not really. But I got into a normalized option, and, you know, ahead of earnings, I pulled some off, and I put my gain, my win back into, you know, an out-of-the-money option. And why? Well, they had earnings. Here comes earnings. Stock's down real big. My option's at 0. Can you imagine if I had a stop on that? Can you imagine if I was worried about, what do I do with it here? What do I do with it here? Now, even the next day when it was up big, my option didn't really go up. But what happened? As that stock trended and really grew on a massive trend, my reward really, you know, came into play. And what ultimately was a $400 earnings play, okay, turned into $6,000 gain, right? And does that account for how many other losses? I mean, if I lose $400, how many times do I have to lose $400 to be in the hole here after a $6,000 gain? Right? I have to lose $400, what, 15 times? Okay, 15 times. Is that going to happen that often with the TrendRider? No. I'm going to get these types of moves, you know, 20, 25, even 30% of the time. And so instead of worrying about stops and instead of worrying about, oh my goodness, what is my stock doing today? And they're having earnings, or the upgrade and downgrade and all the other kind of worries that option traders have to worry about. When it comes to applying the TrendRider, take a look at applying out of the money options and simply putting in what you're willing to lose. I did it the other day. We had a bull signal, bullish TrendRider signal on HIMX. Okay, HIMX, right? So what did I do? Well, I went out and I bought the 8.5 calls. Way out of the money. But I picked them up for what, 15 cents? Somewhere around there, 15 cents? What about this trade? Well, if HIMX goes and makes a move like it's done in the past, right, where it's moving 20 or 30%, my 15-cent option is going to what? Move to $10. My 15-cent option is now worth $1.50. My $400 is worth $4,000. I'm not saying it's going to 10. I'm not even saying the odds favor it going to 10. But the odds are a lot greater that it's going to go to 10 after the recent signals than what it has been, you know, back here. And so setting up a position and saying, you know what, instead of putting $2,000 on the trade, and if I lose 400, I just get stopped out and I take my loss and I move on. Let me just put in what I'm willing to risk. I'm willing to risk my 400 bucks. Do I have to worry about it today? I mean, the stock was up 35 cents. Now it's only up 8 cents. Uh-oh, what does that mean? Do I have to worry about earnings? Do I have to worry about analyst upgrades, downgrades? No. I get to ride the trend and let all that other stuff fall off. Let all that other stuff, go by the wayside. As it goes higher, I have the option to do a few things. One of the things I did with Triple D as it went higher is when my options went in the money, right, when they were worth $2,000, I took them off. But then I took 200 bucks, 300 bucks of my gain, and I just bought more options higher up. All right, kept going up, kept going in the money. Ultimately, that strategy didn't pay off, meaning it ended, and I had a lot of options go to zero, somewhere around 100 contracts, but I still ended up making over $6,000 on the trade. Had it continued, I would have been up in the $20,000 area, right? At some point, it's going to end, but continuing to roll those options up into out of the money and looking for that max trend, yeah, you're not going to call the top, but it allows you to continue to get exposure to the trend in a very nice way. Yesterday, we had a put signal on Herbalife, and I didn't buy options on it. I mentioned even in our Trader Minute community, I want to buy some puts here, but I want a better price. I didn't like the prices they were yesterday, and I wanted to see what a bounce looked like. Fortunately, I've gotten a little bit of a bounce today. All right, so how do I go and possibly play these? Well, Herbalife, let's go take a look at its track record. Does this stock trend, or does this stock tend to, flatten out? Well, let me take a look at the history. 21%, 11%, flat, 17%, 19%, 7%. There's some trendiness here, right? More than half the time, we're talking about double-digit trend. Okay, one obviously in the wrong direction, but we're talking about some good trend potential here with Herbalife. So, okay, what's the average winner gain? 13%. All right, a 13% move on Herbalife. What does that look like? Well, 10% is about $7. So $7 takes us down to 62. 13% takes us down to 60. Wow. That would be a pretty big move, right? Well, can I profit on it from options? Let's go take a look. Okay, here's Herbalife. And I want to give myself as much time as possible, but I also don't want to really pay up. Let's come in here to my option chain. And the $60 strike, if I go out 24 days, the $60 strike is 40 cents. I could buy 10 contracts, but this is a position where if the stock goes down all the way to 60, I'm still losing money. I need it to go below 60. And I need it well below 60. That doesn't sound really all that compelling as far as a risk-reward scenario. I need my stock to go 13% just to break even, and its average gain is 13%. All right, well, let's come take a look at 66. If I buy the 66 puts and pay $1.20, what are they worth if the stock goes to 60? Well, right to sell at 66, right to I could buy it then at 60, so they're worth about $6. $1.20, $1.30 going to $6. Not exactly compelling to me. I want the potential of 1,000% gain. And I'm not looking for 200, 300, 400%. Why? Because my odds aren't incredibly in my favor. And so if I'm just looking at 200% reward potential, ultimately over time I'm going to lose. And so for Herbalife, I look at Herbalife and I go, you know what? These options just are not priced in a way that I look and say, man, I can really take advantage here. Now, sometimes, why is that? Why would that be the case? Well, sometimes it has to do with earnings. Sometimes it has to do with dividends. Sometimes it has to do with events, right? In the case of Herbalife here, I believe they don't have earnings, over this course of time, but it's historically pretty volatile. We've had some, news out on it here of late. And so this isn't one that I look and go, well, right here where it sits, I can play this strategy. So what do? I wait. If the stock flattens out for 2 or 3 days, what's going to happen to those option prices? They're going to collapse. Now they're going to be a lot cheaper. Maybe I can get them for 70 cents instead of $1.20, $1.30. A rally back to about 70. Now I can get them even cheaper. My signal's still intact, but I can get the options at a much cheaper rate. In your paper account, your virtual account, when you see a TrendRider signal come in, take a look at some of the monthly out-of-the-money options. Go buy a few. Watch how those move. Watch how those react. Watch the gains that are put on those. They're much more than what the loss is on the ones that go to zero, and it makes it for a much less stressful style of trading and a much more exciting one. The stress is when it's going your way, not when it's going against you, which is very different when it comes to options. Most option traders, there's that stress when it's going against them. But when it's going your way, that's when the stress comes, because now you're dealing not with $400, but with $2,000, $3,000, $4,000, and so on there. Thanks for joining us. Have yourselves a great one, and we'll talk to you later. Take care.